Thanks, Eric, and thanks everybody for coming along. I've got a few slides here, so if you guys can think quick, I'll talk quick. So, a couple of quick things here. We have a set of new strategic shareholders. That's RCF, the big one. We were really happy about that. They're a very, very long tradition in the mining business. It really gives us a seal of approval of where we're going with this project. They will be appointing 2 new board members. We've met them, very excited about them coming along. They will strengthen the board, and more importantly, they can participate in future financings, as can Corus Capital. Corus Capital, nobody of you guys would probably know them, but they are a Burkina Faso bank, and they took part in the equity placement, and they'd been on site, knew the project, and that was very, very strong indication for us of the project that we're on here. So Corus Capital also would like to take a significant piece of any next financing. So we think we're pretty well ready to go here as we move forward into the development stage. So we've got 55 million in cash. We will be using that almost exclusively to develop the project. So that will go towards the capital cost of the project going forward. So you will see that as we go forward, we will be generally reducing the overall capital costs as we move through the project. Strong board and management will be strengthened by these 2 new members, and Mike Halverson, I think, is here, so you can talk to him. He's very well known in the investment community. So we're very excited about where we're going, and the market cap currently around about $170, $180 million with 55 million in cash, and about a 5.5 million M&I resource. We're in Burkina, 10 mines built in the past 10 years, with another one being commissioned over the next couple of months for Semafo, another one being built by Teranga, and we will be the next one after that, I hope. So a very strong endowment of mining in the country, fiscally strong, great people there. I can tell you that we are looking at hiring people right now. We're in a great location, and the number of very, very strong Burkina people that are applying for this project to be in senior positions is really encouraging. We also think we're in a district. Eric mentioned the potential of mergers, etc. But if you took I don't know if anybody takes a compass these days, but if I took a compass and drew a 15-kilometer arc, you would pick up over 10 million ounces over flat-lying Nevada-style country. So this is really a mining district, and eventually I think it will be consolidated. It just really cries out for that to happen. And location, critical. It's like real estate in Vancouver. We're 80 kilometers from Ouaga, the capital. It takes an hour and 20 minutes. We leave at 6 o'clock in the morning. At 7:20, we're having breakfast in the camp. And that's really, really important. Most other mines, 5-6 hours drive. You can't travel in and out. Most of our senior management will live in the capital and drive in and out. So we'll have a small camp, none of the big issues of running and traveling and feeding people, etc. That doesn't exist for us. And we're focusing on the oxides. You'll see there about 1.5 million of M&I above 0.45 head grade. But you'll also see below that another 727,000 ounces of lower grade material. We fully expect that to be mined. Looking at the cost that we're seeing and the feasibility, etc., going forward, that will likely come into the reserves. And we also have 230,000 ounces that were not permitted within a seasonal riverbed, and we're working on that right now. And all indications going forward is they will also be added. So you're looking at well over 2 million ounces of free digging, i.e. no drill and blast, oxide resources here. At the current mining rate, that would give us 16, 17 years of mine life. We're already planning in the feasibility study that we can shorten that by simply adding 1 tank to the leach circuit. Focus is on oxide, free digging, as I said. New flow sheet is eliminated, crusher, stockpile, heap leach. I think we'll take around $100 million of a capex out. That was about $260 million in 2015. Even with some slight cost inflation, we still see $100 million being removed from that capex. We will reduce reagent consumption, improve the overall recovery, lower sustaining capex because there is no drill and blast here, no hard rock, no mining fleet of our own, all done by a contractor. So the sustaining capex will be reduced. One other key thing that we found as we went through the feasibility study is that We would normally have to build a tailings dam in stages, and we'd have to use borrow pit material to do that. With all the test work that we've done on the material, 80% of our mine waste will go towards the building of the tailings. So not only does that reduce closure, but it also reduces all of the upfront capital of doing that in tailings without having that type of material. We focus on the upper portion, which is the shallow oxide, average depth of 45 meters. Most pits are down to 200, 220 meters. We're mining from an average depth of 40. 90% of these resources are within 25 meters of the plant in terms of depth. That's quite something in terms of mining. And I can tell you that we had 5 mining contractors on to bid on this, and they're all sort of salivating to get it because it's a really, really simple project for them. The previous flow sheet was very complicated. We're getting rid of the crusher, the stockpile, all of the stockpile reclaim, the conveyor systems that go with it. We're getting rid of all of the heap leach, all of the people that go with a heap leach, and all of this classification system. One other thing you'll see there is a front-end loader loading a pocket. That will not happen. Normally you have a grizzly that sits at 35 degrees, the truck backs up to it and dumps. We won't have that. We'll have a flat grizzly. We have no rock, so the trucks will simply drive over a flat grizzly, end tip, and drive on. That saves almost a minute of cycle time per truck. So you can guess what that adds up to in terms of net present value to the project. Our project is simply end dump into a mill. 80% of it is not even ground. It's already minus 150 into a set of 7 leach tanks, not properly depicted there. We have 2 pumps in the whole project and 1 conveyor. So it's more like a gravel plant than a gold plant. And then we have a ADR plant, which will be custom built by one of the standard people, and out to a tailings pond and reclaiming back with the water. Tailings originally was butted up against a heap leach. Why I'm showing this is because they had to build 100% of the tailings pond and line it. So that all had to be done with upfront capital to ensure that you have this abutment into a heap leach. That's all gone now. That heap leach disappears, and now we can build it in stages. It actually won't be 2 stages, it will be 4, but we'll be building it continuously with mine waste. So it will not be borrow material. Exploration. Quite exciting, really excited about the exploration. We did some drilling at the start of 2017, very successful, led us into a rethink of the project. We think that there's some real upside in the oxides with high-grade zones. This will not be in the feasibility, it will be upside to the feasibility, so that will be done later this year, probably towards the end of the year. And that came about by discovering P17. We didn't discover it, the artisanals did, and it's hard rock and it's high grade. And it's not the same 55 dipping. So that led us to go back in and drill these targets. We put out a lot of results. But here's what we saw in P17. This is normally a 1 gram ore body, and you can see what we're getting here. 10, 12, 14, 8, 13, 3. So this is a totally different ore body, wide open. It's not dipping at 55, it's plunging at 22. And wide open, sorry, just there, wide open in between, and we'll have more results coming out of that later this year. Why is it plunging at 22? Well, we don't know, but it is, and it's granodiorite, and which is different than our main ore body. So there's something significant happening around the main deposit. And going back in and looking at the main deposit, we started drilling here. You can see these now high-grade zones. They're also dipping at 22 when we thought we had a 55 zone. These were the historic results in a less than 1 gram ore body. You see 32, 9, 13. We infilled those this year, and you can see the same results that we're getting. Once we knew it was plunging at 22, we were able to hit it. And what does that really do? Well, instead of modeling the ore body at 55, we're modeling those zones at 22, totally different domain, so the grade goes up significantly in those areas. And now that leads us into a new model into the sulfides, which we will drill likely in 2019. I don't think we'd really get to that in 2018. So where are we? Next steps. Feasibility, as Eric said, last week in June. I think we might get it out before that, but it's going well. We expect that to be no delays there. done a great job, very happy with the consultants, and will likely use the same team going straight into feasibility. Model the higher grade zones, which will come out sometime later in the year, which will then be added to the economics of the study. We have 240,000 ounces of M&I in those restricted zones. I expect that those will come back into the reserves sometime in 2019. And then phase 1 resettlement, we're already finalized that. We will start that this year. We will drill prospective sulfide and oxide targets, and we look at project financing alternatives, and we're well into that right now. We're already talking to some of the main lenders. You can probably guess who they are, but they all speak French. And strengthen the team. We are doing those interviews right now. I can tell you with the location of the project and where we're at with the financing and who we did it with, we are seeing some excellent CVs of people for general managers, head of technical services, construction managers. So I would expect some announcements on that over the next couple of months. So it's an exciting time for the company. Really excited about where it's going. And we haven't even touched the sulfides yet, which are about 3.5 million ounces down to an average depth of 120 meters. So we think we got something going here. And as Eric said, all going in the right direction, I hope. Thank you very much.